Okay, welcome everyone. Welcome back. I'm going to do a closing market wrap because I think we have some, setups going on right now. I think it's important to just realize what the chart's showing us for the market. But before I get started, I just want to bring this up. If there's a lot of scammers and bots that get on the channel and post comments. If first off, what I will never post my WhatsApp number or give you an email to contact me. I will never do that. All right. If I reply to a comment, you should see the certification badge that shows it's me. Don't just look at the image of the reply, because these bots copy my image and then reply back trying to get you to get a hold of them and scam you. So again, I will never do that. The only thing I basically tell people is check out my course. And if you're emailing me or responding to me in my course, then you are actually getting a hold of me. But if you are, if you just see comments, make sure it's a certified badge and look at the context of the comment. All right. How often do I talk about Bitcoin and cryptos and getting, that's all scam stuff. So let's just, I just don't want anybody to get scammed by something. So, all right, moving on, triple Qs. Let's look at the chart here. We've got, all right, that's a breakdown. That's a sell signal, continued downside momentum. So I suspect tomorrow we're going to gap down, and it's at this moment, with that close, it's obvious that we're going lower. Doesn't mean that we are, but I think it's obvious to most, to the most market participants, or starting to become more obvious, I guess, that we are going lower. Obviously, if you've been following my channel, I've talked about getting lower basically on this sell signal way up here. And I kept putting out videos saying it's a sell the rip market, sell the rip. And it's hard to do. I understand that, because on this day right here, which was the March 1st, just a couple days ago, they gapped the market higher and ripped it to the upside. Everything seems super bullish at that moment. And if you're long, you feel great. You're making money. But again, that's how it works, is it's called the slope of hope for a reason, because if you're down a little bit and then they ramp it higher, it keeps you in the trade. You don't get out. I'm sure anybody that was, buying into this rally or still long and holding wishes they would have gotten out here, because now we're down quite a bit more from that point, down to about 5% or so from that high. So again, sell the rip, that's the market, and that is the pattern that I'm seeing. And the reason why is we broke the bullish trend. This is the bullish trend. A lot of people were saying, oh, we're still in a bullish trend. Well, okay, but if you want to signal what are you looking at? Higher lows and higher highs? Is that your bullish trend? Because in that situation, we now have a lower low right here. So this was a previous low right there, and we now made a new low. So on this dip right here, there's your low. You went higher. So now we have a ramp here was a lower high and a lower low. So it's obvious, right? And now that it's obvious, the trade will start playing out even more. But again, I try to find trades before they're obvious. Before they're obvious to everyone, I'm trying to find the trade and not wait for it to just be staring you in the face saying, okay, here I am. Because at that moment, when it's obvious to everyone, you miss the best opportunity. Not to say that the best opportunity is missed, but from the breakdown now, from the sell signal, which was basically right here, it's the market's already down 5%. So I think we've got another 5% to go. Again, I think we're heading down to this 300, 298 area, which is another 3 or so percent. We might undercut that a little bit. We're likely to find some support down here at this 298 area. So at this point, market looks to be heading lower. Look for a gap down tomorrow. I think that's likely. One thing that's interesting is the VIX, and I'll cover that here in a second, hasn't spiked too much. It was up 10% today, but the SPY has really not sold off that much. you can see just getting a little selling today, but we don't have a real clear downtrend in the SPY yet. So in order to make a downtrend, you'd want to take out these lows right here and make a new low. And then you would say, okay, it's obvious we're in a downtrend, at least for the short period of time. I mean, if you want to wait, if you wait till it's, till you're knocking out this big trend right here and you're way down here, the opportunity's been, by the time it's completely obvious, that trade is usually over, at least for the short period. So if you were to wait till, let's say the SPY sells all the way off, and let's say it breaks this uptrend line right here and we get a breakdown, maybe we're down here breaking the 200 or at the 200-day or something. Well, if you wait till you start to make that move and then you say, okay, now I want to short, well, it's not objective anymore. You've broken way down. By the time, if you get short up there, or you say, okay, now I want to sell my longs, that's usually about the time you get a bounce. So again, I try to point out the trades that are obvious or before they're obvious, but SPY hasn't broken down that much. So I would expect the VIX to start popping. So I look at this UVXY, and again, I've got it circled here because the point is that all these little lows we've been making have been divergent lows and bullish divergence, signaling that we're going to see an uptrend or a rip in volatility. This thing won't uptrend, but it'll rip. So it'll look something like this, where you're not going to trend over a long period of time higher, but what you're going to do is there's going to be a mad scramble when it's obvious to everyone, which I think is we're at that moment now, that there's going to be more selling or we're going into a correction. There's a mad scramble for protection. And so everybody scrambles to buy puts, and that's what spikes the VIX. So I think we're at that point now. I think we're going to get that spike in the VIX. Is it going to be this big? I doubt it. I don't think it'll be that big. But UVXY, okay, so, UVXY, I mean, where can we go? I think we could probably get up to here, probably about 2367 or possibly 2930 or somewhere right in there would be, that'd be an area I'd be looking for that to kind of top out. It can obviously run a lot more than you think, but yeah, that would be a higher probability area. From where we're at now, that's a move of about 150% up to 200%. That seems about right for a volatility spike. The point is, this continues to have bullish divergence. Each one of these lows has been a divergent low, signaling a trend change is likely, and now you just wait for that trend change. Okay, so bullish divergence, I think volatility spikes when the SPY starts to sell off. Let's look at small caps. All right, they're just starting to break. Not impulsive, though. That's not a sell signal yet. Likely, I think you could get a gap down tomorrow in the IWM, and that would be the sell signal. But you've got this uptrend line right here in the daily. We closed, we're starting to crack it right there. And you did get the daily close below that trend line. It's just not impulsive. I think it probably happened towards the end of the day. Let's look. Yeah, in the last half hour. So it's just, that's not good enough from my perspective for a sell signal. Although it is a break of support, I'd like to see a more impulsive break, not just, a little bit below. And so look for a gap down or something like that. That would likely be the sell signal in the IWM. And this IWM is really, this thing is, this one could come down quite a bit. First target, though, I would see as being right, well, here's your first line of support, 205.60. And then a break of that, and you're probably coming down to about 193. Depends on how impulsive the sell-off is. We might just slice right through this first line of support and go right to here. Yep, that's all I see on that one. So just starting to crack. Look for that gap down. Okay, here's gold. An update on gold. Sorry about that. I had a phone call. All right, so gold broke its bullish divergence with the PPO. Kind of started to burn through it. It has not on the RSI yet. So here's the RSI on the daily, and you can see where we closed is basically just right down there. So they're pushing, trying to break it. Hasn't fully broke yet. So, and you can see this trend line that I have marked out, again, like I had mentioned in the earlier video, this is not a trend line that I trust, but it is a trend line I want to watch to see if we get a reaction around it. Starting to break that, we started to break that, but too close to call. So I don't see anything on gold that tells me, that we're going a whole lot lower. Although we could, because we're right there. We're starting to break the bullish case. I still think gold's in a bull market, but there is the possibility that gold, if we break this, we could get a swift move down in gold down to this 1570 area. That would be what I see as your next level of support. So just something to keep an eye on. The miners, they were down today, but they weren't that weak. If I go here, you can see, some of this, that's silver there, but the miners, here's Barrick Gold, down 1.8%, not a whole lot, a little bit in the after hours, but we don't mark that out. But you can see, Barrick, even though it was down, it still held this support line. So here's the support line. You got this bullish falling wedge. We had a slight breakdown, but that popped up, and we're still holding that support line. We're still above support. So even though it was down, still looks constructive and still looks bullish to me. So that's what I'm seeing in some of these miners. Here's financials, XLF. Possible reversal candle right there today. That's a doji, so I would look for confirmation of more selling. So another down day would give you confirmation, and then I'm probably going to the hourly. Look for a break of this trend line. Let me get the tool that I need. The trend line is, it's probably something like this. So look for a break of this trend line with on the daily more selling, another candle, another down candle. That'll give you that confirmation that this was a reversal. And if we break down, then I think XLF is likely to head down to 29, about $30. So Microsoft, this one's going to be key, because if this breaks, then the fangs are all breaking down basically. Microsoft and Google are kind of the last holdouts, but Microsoft closed right on support right here, about 227.65, just slightly below, but close enough where it's basically right on support. You get the gap down tomorrow in Microsoft, and that's going to signal that this was a false breakout, and that's bearish. That should set Microsoft up for a swift move to the bottom of this trading range, which is about we'll call it 199, 200, right in there. So that's what I'd look for in the near term on that one. Energy, XLE. So again, if the SPY's going to sell off, energy's going to sell off too. Possible reversal candle right there. And you want to look for confirmation, which would be another selling day tomorrow. So if we gap down and get a sell-off tomorrow, energy's breaking down tomorrow. So what I would look for in XLE is if you see that break, that gap down in the morning of XLE, likely energy's going to sell off throughout the day, and it's going to be pretty impulsive. So something to watch for, because you have this trend line on the daily right here. A gap down will be breaking trend, and you have that reversal doji right there. So two kind of signals right now that, there would be two signals on a gap down that we have a reversal in energy. And if energy reverses, look for it to come all the way down, probably come into somewhere right around 40.95 or so. We could even go down all the way to 37. It's hard to say exactly where it'll go, but I just know it'll go down. And then as it starts falling to these support levels, we'll look for signs of, bullish divergence and trend change. All right, TAN. See that close? Pretty obvious now, isn't it, that TAN's going lower? Doesn't have to. Nothing's guaranteed. But that close tells me we're going lower. So we were in this consolidation range. Again, uptrend line right here, bearish rising wedge, negative divergence in this wedge. You look for the break of trend, which is right there. Again, I teach all this in my course. So if you guys are interested in learning how to, use this stuff to your advantage, take the course. It's a $99 course. It's going to give you 5 or 6 hours of good quality training that's going to teach you all this. That link is in the description below. And so you consolidate for a little bit and, we're moving lower. So this is a bear flag. That's what this is. Here's your flagpole. There's your flag. You take the initial breakdown, gives you kind of the measured move, which, as you can see, puts us into this next line of support. All right. So I think we're heading down to about 78.60, which is not, that's not that far off, as this thing continues to drop. That's another, it's another 15, 16%. That should be the next level of support, likely get a reaction there. Walmart breaking back into the bearish rising wedge. So what I see on Walmart is this was a false breakout, all this price action. And you can see negative divergence. I had it marked out in advance. And yeah, Walmart's going lower, most likely. So what I would think at this point, now that you can see where we closed, breaking into this bearish rising wedge, here's the wedge. Going back to 2015, big bearish rising wedge. So I'm thinking we're heading straight down to the support, which puts us down here in the 115 or so. Probably get a bounce there. We'll probably bounce off of that and head right up to the top. Who knows? But ultimately, I think we're going to break this lower trend line. I'm just trying to tell you guys what I think this is going to do. It doesn't have to play out that way. And the technicals might change as we start to get down there. But as of right now, looks like we're going to hit this, bounce off this, and then break. And over time, I don't know how long it'll take, but over time, heading down to this level about 86. All right, that's kind of my call on that one right now. And one thing I want to point out, I get a lot of crap from people when I'm bearish and a market's raging bullish, and all of a sudden I start seeing technicals that tell me the trend's about to reverse, and I start putting out videos saying, okay, I know everything's bullish right now, but I'm telling you what I think's coming next is bearish action. And I get people trolling me and all the time. They just say, oh, you're just always wrong. I'm always 100% wrong. But they only say that on the days that they're right. On the days that I'm right, like today, I don't hear anything from those people. So it's just kind of funny. But here's the thing I want to point out. Walmart gapped down and sold off in a period of just, this looks like about 2 weeks. 2 weeks worth of selling, including this gap here. Wiped out all the gains and all the price action, really from here, I'd say, from July of 2020. So 9 months of gains wiped out in about maybe this is 3 weeks, 2 or 3 weeks, 9 months of gains worth wiped out. And so before you put in a comment to troll me, because that's the thing, I hear 9 months of trolling, 9 months of people saying, oh, you're so wrong. And then 3 weeks I'm completely right, and they're silent. So just understand that markets go up 80% of the time and they fall 20% of the time. But that 20% of the time they fall, they usually will wipe out all the gains that 80% of the time happen. And that's what this is. Peloton closing down 8%. Nice bearish close. That's just weak across the board. So next level of support looks to be right about here. Looks like the 200 days coming in right here. We'll probably hit that tomorrow. I'll likely be covering my short into that drop, whether we gap down at it or we fall into it. Down here at about $100, somewhere right in there. Looks like we'll likely find some support. So just something to keep an eye on. Qualcomm continuing its descent. Looks like we're coming into gap fill. So again, this is a gap. Everybody sees it. We're likely, maybe we'll open down here and probably bounce right at the open. So something to keep an eye on that one. I think it's like, we're falling into major support. So I think it's likely you'll see a bounce, when we hit this level, if we hit it, But I think Qualcomm will probably have a bounce tomorrow after it opens at some point. Zillow Group, so broke this level of support. This was from a resistance. You can see it was all resistance through here. And then when we broke here and right here, it gapped over that level. So it just validates the level when you see gaps around levels. Gapped over it, come up. And then when we came back down, we hit it right there. We bounced. And then we fell down and broke today and got the daily close below. So that's a bearish close. I think that sets up Zillow for a move down to 130, 133. And we'll likely get a bounce there. Zillow could, one thing to keep an eye on, some of these high flyers like Zillow that have just like gone parabolic basically from March. I mean, this thing is up from the March lows all the way to the highs, 800%. So we might just start, we're likely going to get a bounce here, but I think if we were to break this level of support right here at 133.50, we might just start slicing through some of these support levels to the downside. I would expect, because this is a lot of bullish momentum, everyone who's been bullish this thing, once they realize the momentum's changing, they're all going to scramble all at once, and that's going to cause this thing to start slicing through support levels. So let's watch that. That'll give us a cue as to the behavior of this sell-off, whether it's, to let us know how impulsive and how deep it's going to get. If we start seeing stocks just slicing right through support levels where they should get a bounce, then that tells me that we're likely going to have a bigger correction or potentially more. I've been calling for a bear market. I think that's where we're at, If I go back to SPY here, again, the blue line right up here has been my major resistance line going back to the weekly chart all the way back to the 2009 lows. We held support all through here, broke, Fed pump, hit resistance, broke, Fed pump, hit resistance. So again, this is the area where I think we're at or near the top of the market. And I put out a video a while ago. I think we were probably right in this area where I said I think this is the top of the market. So again, I keep looking at it as this is the top of the market, all right? And I think we're heading lower. So that's really what I got. Here's Tesla. So support was basically right here at 657. And you can see where we closed with a slight break. So, I think it's likely Tesla goes down to this 625. Really, my target for Tesla, at least for this move, this downward move, I think is going to be somewhere right in here. I don't know when it's actually going to get down there, so it could be, along this trend line. But I think that's where Tesla's going to find its first level of support. I think we'll probably get a bounce around there. From the highs to the lows, or to that area, would be a drop of about 37%. That's a good size drop. So I think that's probably what's in the cards for Tesla. But I think Tesla's actually going to go a lot lower over time. I'm just trying to let you guys know where I think we're going to get the first reaction or first bounce. I think it's very probable that Tesla is going to come all the way back down. Well, I can't say how probable it is, but I think it's possible Tesla's going to come back down into this 225 area, possibly down to this 129. And there is a gap all the way down here at about 52 bucks. You're likely not going to see that unless the market is just in a full bear market. If the market goes into a bear market, then Tesla could give up all of its gains and come back down to this 60 bucks. That would likely be the end of the selling for that bear market, at least in Tesla. I know that's a long ways down, but again, nobody thought it could do this either. That it could just go crazy parabolic to the upside as much as it did either. So when the selling starts, it can be a lot more than you really think it's going to be. All right, so a lot of those trades that I've pointed out and been talking about for weeks or maybe months, they're all starting to work. The charts were, I've been setting up for them for a while, and now they're all starting to work. This one, though, hasn't started to work yet. I'm not short this one, but I've been watching it, and this is one of those high-flying mania stocks, Digital Turbine, that hasn't triggered yet. So just something to watch. There's an opportunity here. You have an uptrend line right there. You have what looks like a bearish rising wedge, or could just be an upward price channel. Doesn't have to be a bearish rising wedge. We have negative divergence on the PPO and the RSI. So what I'm looking for is a break of the trend somewhere, down here. An impulsive breakdown of that trend line should set this up for a move. Let me extend this out just a little bit. Should set this up for I mean, the obvious target is this gap down here, this gap fill. We break this trend, I think over time, this will trend down and fill this gap. That would be the trade idea that I would have on this one. And that is, from where we're at now, would be a drop of 80%. So that's a good size drop. I think that's how this thing's going to play out. I wouldn't try to front run it. I'd just wait for a break of this trend. Wait for the impulsive breakdown, the sell signal, and then you could swing trade it down to that gap. Okay, guys, that's all I got. Leave me a thumbs up. I hope you're finding value here, and I'll catch you guys on the